So the throughput account, this net. So the throughput accounting is similar to what we call the marginal accounting. Okay, we have done what we call costing techniques, and we know that we have the marginal accounting technique, and we also have the assumption costing technique. The throughput is similar to that one. Okay, how do we calculate profit and how do we calculate contribution? Okay, let's say contribution. How is contribution calculated under marginal costing? How is contribution calculated under marginal costing? Okay, yeah, Senior Augustine.
Is contribution is the sales or the revenue minus the variable cost.
Okay, minus the variable cost, isn't it?
Yes, please.
Okay, and the variable cost is what? The variable cost. What are the components of the variable cost?
That is the direct material, direct labor, and direct expenses.
Okay, so the variable cost can also be called a prime cost. So we have the direct what? Direct what? Material.
Material.
Okay. Then we have the direct labor cost. Direct labor. Then we have the direct expenses, if any, or direct overheads or variable overheads. Okay. Okay. So this is what we do. All right. But if you pick, let's assume that we are going to look for contribution for a table. We are calculating a contribution for a table. Okay. If you pick a table, yes, like what forms the table? What is the major component of the table? What are you going to see on the table? What are you going to see as the major component that form the table? What are you going to see? What are you going to see? You will see the wood, isn't it? Okay. You won't see, without the wood, there won't be any table. You won't see the issue of people working on it, although you are going to see like they are going to be joining certain places. But the major component of the table is the what? Is the material, which is the wood. So the throughput accounting, what they are trying to say is that they are saying that we should not, or whenever we want to value a material, we want to value a particular product, we should only base the cost on the major component of of the product. So what form the product is the wood. Okay, they are going to be adding value, but that particular value addition will be transferred to the customer. So if you are going to value your table based on the major component of the table, which is the material. So for throughput accounting, contribution is calculated as the revenue minus what? The revenue minus what? The direct material costs. Okay, so after you produce the product, just assume that the product has been produced with what? With what you bought to produce the product. After you have been able to sell the product to the customers, that is where you are going to be transferring the value or the cost of what labor to those people. So the throughput is saying that after producing a product, assume that no value has been added to what? The major component of the product. No value has been added to what you used to produce the product. So the cost of the product is purely the material cost. Any other cost will be after you have sold the product. After you have sold the product. So throughput contribution is calculated as revenue minus what? The material cost. So labor cost, direct expenses, manufacturing overheads, all of these things are being treated as what? Conversion cost. They are treated as what? Conversion cost. Cost that is incurred to change the raw material to what? To finished goods. And if you are going to be producing the goods, some of the goods will be left. They are called investments under throughput. The closing stock or the work in progress are all called investments. Assets and all those things that you'll be buying will all be called investments, or the money that you'll be spending to what? To produce the products are all called investments. Okay, so we'll be talking about the throughput. We'll be talking about the conversion cost. How do we calculate a throughput? Throughput is calculated as revenue minus what? Minus material cost. They have examined throughput accounting twice already, so they can still examine it. It's very simple. It's similar to limiting factor. If you are doing it for two products, it's similar to limiting factor. Okay, so throughput is basically we doing what we call super variable costing. Super variable costing is only we are costing our product based on what? Based on the material cost. Every other cost that we incur to produce or to change the raw material into the finished product are treated as what? Conversion cost. They are not treated as what? As direct cost. They are treated as indirect cost. They are treated as what? Indirect cost. What are the questions that will be asking you in the exam? They can ask you to calculate what we call throughput accounting ratio. Throughput accounting ratio. How do we calculate throughput accounting ratio? Or why should we calculate throughput accounting ratio? Okay, you have a product. You have a product, or let's say that you have product X, which the selling price per unit is $10, and the material cost per unit is 7 cedis. Okay, then they will now give you, yes, you are going to be producing, so you'll be using workers, and these people, they will be spending hours to produce. Then they will give you the hours to produce 1 unit. So hours to produce a unit. Hours to produce a unit. There's a minute. All right. All right. So they will give you the hours per unit. Maybe they can give you like maybe they can give you 2 hours. Okay. So they will be telling you that the hours available, you cannot be able to produce the units that you want to produce. Maybe you want to produce 20,000 units. So you want to produce 20,000 units, okay? You want to produce 20,000 units. And they are saying that the labor hours available cannot enable you to what? To produce the 20,000 units. Or you ask yourself, should I go ahead to produce this particular product? Okay, the hours available. They will tell you that the hours available cannot help you to produce all the 20,000 units. And they also give you the fixed cost. So if the hours available cannot be or cannot help me to produce 20,000 units, it can only help me to produce 15,000 units. Okay, you ask yourself, you know that for fixed cost, whether you produce the quantity that you want or you don't produce, whether you produce 1 unit, the cost will still be the same. So you ask yourself, if I'm producing the 15,000 units now, will I be able to get money to recover my fixed cost? Will I be able to get a contribution that will be able to cover the fixed cost? That is a question that you'll be asking yourself. So what you have to do now is that you have to calculate what we call the throughput accounting ratio. It's very simple. The throughput accounting ratio to know whether you should go ahead to produce. You are going to be producing and you are going to be getting a throughput contribution of 3 cedi per unit. You are producing what? 15,000. So your total contribution will be 45,000. So the question now is, would the 45,000 be enough to cover the labor cost, which is treated as what? A conversion cost, the manufacturing overheads, and the other costs? Will it be able to what? Would the 45,000 be able to cover these costs? If yes, then you can go ahead to produce. If no, then you have to decide not to produce. But what we do is that we don't do the calculation to know whether it will help us to what? To cover all the other costs or not. We calculate a ratio to just determine. And that particular ratio is what we call the what? The throughput what? Accounting ratio. So you don't have to do this one by one. Put the figures one by one to see whether you are going to be getting profit at the end of the day or you'll be getting a loss. You just have to calculate one ratio to determine whether it will give you profit or it will give you a loss. And that particular ratio is what we call throughput accounting ratio. All right. Okay. Okay. How do we calculate throughput accounting ratio? Okay. You ask yourself, what is our contribution here? What is our throughput contribution there? What is, okay. That will give us 10 minus 7. That will give us what? $3. Okay. So you ask yourself, how many hours are you using to get a $3? How many hours are you using to get a $3? You are using 2 hours. Okay. So what will be the contribution per hour? What will be the contribution per what will be the contribution per what you are using to produce? What will be the contribution per hour? Okay. That will be 1.533 divided by 2. That will give us 1.5 per hour. Okay. Then you ask yourself, what is the total hours available? What is the total hours available? The question will always give you the total hours available. So let's assume that the total hours available is 25,000 hours. Okay. That is the total hours available. But maybe you need like what? 30,000 hours to be able to produce all the units. But you have only 25,000 hours available. Then you ask yourself, what is the total what? Factory cost? What is the total factory cost? The question will give you the total factory cost. The total factory cost is the what? Is the indirect cost, the cost that you are going to incur to produce the product, except what? The material cost. So the labor cost will be part, the variable cost will be part, the fixed overhead cost will be part. Then you ask yourself, what is the total factory cost available? So the total factory cost available, they can give you 20, or they can give you, let's say they are giving you 50,000. Okay, the total cost available is 50,000. Okay, how many hours are you going to incur this cost for? How many hours? The total factory cost is 50,000. How many hours are you going to incur this particular cost for? How many hours are you incurring the 50,000 for? How many hours are we incurring the 50,000 for? Oh. Please, can you hear me? Please, can you hear me? All right. Sorry, the network is bad. Okay. So our contribution per hour, what we have gotten was 1.5. So I'm saying that the total factory cost, the question will always give you the total factory cost, or you have determined the total amount that you are going to be spending, which will be a cost, which will be a production cost, but except what? The material cost. And the total factory hours available, the total hours available to produce. The question will also give you that, or you determine that the total factory hours is what? 25,000 hours. Okay. How many hours are you going to be incurring the 50,000 for? The 50,000 that you are going to be incurring, it is for how many hours? Or how many hours are you going to be working before getting the factory cost of what? 50,000. How many hours? Please, can you hear me? Without you producing, are you going to be getting the factory cost of 50,000? Please, can you hear me?
No.
Yes, we can hear you.
Oh.
Okay. I'm saying that if you are not producing, are you going to be incurring any factory cost of 50,000?
No, please.
No.
And if you decide to produce, how many hours are you going to be using for the production?
25,000.
Okay. So you are incurring 50,000 for 25,000 hours, isn't it? Okay. So what would be the cost per hour? What would be the cost per hour? What would be the factory cost per hour? Okay. So
that would be 50,000 divided by the 25,000.
okay. So that would be 50,000 divided by 25,000. Okay. So you have what we call 2 cities, isn't it, per hour? Okay. If you produce, you are going to be incurring a cost per hour of 2 cities, isn't it? But if you produce, what would be the contribution that you'll be getting per hour?
That's the 1.5.
1.5.
Okay. Will you go ahead to produce or you will not produce?
I will not produce.
I will not produce.
Why? Why are you not going to produce?
Because the cost is more than the return.
Okay. So you can see clearly that the cost is what? The cost over here, which is 2 cedi, the cost that you are going to be incurring to produce this is higher than the what? The return that you'll be getting. So you have to calculate what we call the throughput accounting ratio. Throughput accounting ratio, which is calculated as what? As this particular figure. I will name that particular figure for you, divided by what? This particular figure. So you'll be getting, what are you going to be getting?
0.75.
Okay, 0.75. So that 0.75 means that for every 1 cedi of the what? Of the factory hours that you are going to be using, for every 1 cedi of the factory hours you are going to be using, the return that you'll be getting on it is 0.75. It means that you are going to be spending more than what you are getting. So you should not go ahead. So whenever this particular or the throughput accounting ratio is less than 1, it means that the company is going to incur more cost than what they are going to be getting. But if it is 1, it means that you are not going to be getting anything because your cost will be equal to what? Your contribution. So you are going to be making a 0 profit or a 0 loss. But if it is more than 1, then it means that the company is going to be getting more because the top is the return and the down is the what? Is the cost. So how do we calculate throughput accounting ratio? The throughput accounting ratio is calculated as the what? The contribution per the bottleneck. What do we call the bottleneck? The bottleneck is the same as the limiting factor. The factor or the item or the variable that is in what? That is in shortage or that is not enough. That is that is scarce, that is limited in supply. But if you go to the short-term decision making and the limiting factor, we call it what? Limiting factor. But if you come to throughput accounting, we call it the bottleneck. The bottleneck. So the item or the variable that is posing a problem to us, that is not available. So it can be the labor hours, it can be the quantity of the raw materials that we need that is in shortage. So the variable that is making us not to produce our total quantity, that's what we call the bottleneck, which people call the limiting factor. Okay, so we calculate the, okay, someone is saying key budget factor, no problem. Okay, so the throughput accounting ratio is calculated as the contribution or the throughput contribution per the bottleneck. So the bottleneck over there was labor hours. Labor hours. Or some people, they call it the throughput return. Okay, the throughput return. So by the bottleneck divided by what? The the factory cost per hour or the factory cost per the bottleneck. So you are going to be finding these ones one by one before you come and use them to find your, so the bottleneck, it should be bottle plus neck. Okay, bottle neck. Okay, so this is for a single product. This is for a single product. But what about multiple products? We look at that. But first, we have to move from what simple to complex. So let's look at a situation where we'll pick a question relating to what a single product, and they will be asking us to calculate the throughput accounting ratio, and we have to do that. So let's pick a question there. Let's pick two questions on the single product, and we see how we can go about it. Okay, what am I going to say? That particular question now. Okay. Please a minute there, I'm sure my adult reader is outdated, so the things are not coming. All right, so single product, question 16. Who is going to read that for us? Who is taking it for us?
A company, can I read?
Yes, please. Yes, please.
A company can produce many types of product, but is currently restricted by the number of labor hours available on a particular machine. At present, this limitation is set at 12,000 hours per annum. One type of product requires material costing 5 cedis, which are then converted to a final product which sells for 12 cedis. Each unit of the product takes 45 minutes to produce on the machine. The conversion costs for the factory are estimated to be 144,000 per annum. Required, calculate the throughput accounting ratio for this product and state the significance of the results.
Okay. Okay. Thank you very much. What is the bottleneck here? What is the bottleneck here? What is the bottle? The bottleneck is what?
The hours.
Which of the hours?
The hours.
Are you sure? Okay, it's labor hours. Okay. The bottleneck is labor hours. Okay. All right, that is fine. That is fine. So the question now is, what do we have to do? They are asking for throughput accounting ratio. We need to calculate two different ratios, isn't it? Okay. We have done that First, that was what I have done for you. I took the throughput contribution divided by the bottleneck and also find the cost per the bottleneck. I find the contribution per the bottleneck and also the cost per the bottleneck. Then we compare. Okay, if I'm producing a product, what is the contribution that I'm getting per unit? Okay, I'm using 3 hours or 4 hours to produce that. So what will be the contribution per hour? The factory hours too, I'm using this number of hours and I'm carrying this particular cost. What will be the cost per the hour that I'm using? Then you compare to the return that you are getting and the cost per the hour. Then you see whether you should continue or you should not continue. So the throughput accounting ratio, we need to first calculate what? 2 different ratios. We need to first calculate what? 2 different what? Ratios. All right. So let's come to question 16. So you have to put your throughput accounting ratio here. Throughput accounting ratio here. Then we have the throughput return or contribution per the bottleneck divided by the factory cost per the bottleneck. Okay, so what do we have to do? We have to go and calculate the contribution per the bottleneck. What is our contribution from that question?
7 cedis.
What is the contribution there?
7 cedis.
Okay, how did you get a 7 cedis?
The salesman and the material.
Okay, so we have the revenue minus what? The material cost. So that will give us 12 minus what? 5. Is that correct? 12 minus 5, is it correct?
Yeah.
Okay. So we are getting 7. Okay. What is the labor hours requirements? How many hours are we using for 1 unit? Yeah, Auntie Jocelyn, your hand is up.
Please, I wanted to find out if it's contribution per unit.
Yes, contribution per unit.
Okay.
All right. So what is each unit of this product takes what? How many hours to produce on the machine?
0.75 hours.
0.75 hours. How did you get a 0.75 hours?
45 divided by 60 minutes.
Okay, 45 divided by what?
60.
60 minutes. We know that 60 minutes will give us 1 hour. So 45 hours will give us what? How many hours? That will give us 45. That will give us 45 divided by the 60. So you are giving the time in what? In minutes. You have to change it to hours because you are giving the factory hours in hours, not in what? Or the factory time in hours, not in minutes. So you have to change your what? Your minutes. We know that 60 minutes will give us 1 hour. So 45 minutes will give us what? So we have this and this. That is it. Then we now have 60 s is equal to 45. So 60, 60. All right. So that is why we are dividing. So we now calculate our hours requirements or the hour per what? Per unit. So let's calculate the hours per unit. So that will give us 45 over 60. What are we getting? 0.75. Okay. So that is, we are using 0.75 hours or 0.75 hour for 1 unit. But what is the contribution per unit? What is the contribution per unit?
7.
But we are using 0.75 hour to produce what? 1 unit. So what will be the contribution per the what? The bottleneck, which is the hours. So what will be the contribution per the hour? The
9.33.
9.3.
So the contribution per the bottleneck will be the contribution per hour divided by 0.75. What are we getting? 9 point what?
1.3.
Okay.
1.3.
Okay, so what will be the next thing that we have to calculate? We have to calculate our factory cost per the bottleneck. Please, sometimes they will not give you the factory cost. You have to calculate it yourself. So the factory cost will be the labor cost plus the variable cost plus the what? Plus the fixed cost. Because under throughput, labor cost and variable costs or direct expenses are treated as what? Are treated as indirect costs. So let's go to the question. Yes, Nakafu.
Contribution per bottleneck, I think you wrote 9 out of 0.75.
Sorry, it's supposed to be 7. All right.
Yes, sir.
Okay, thank you. Let's go to the question and get, so what is the factory cost? What is the total factory cost given to us? The conversion cost for the factory is what?
144,000.
How many hours are we incurring this cost for?
12,000 hours.
12,000.
So what will be the cost per the hour?
12,000.
Okay, so we have 144,000 divided by 12,000. So what will be the cost per the hour?
12,000.
Okay, that will give you 12. Just 12 cities. Okay.
Yeah.
Looking at this, will you go ahead to produce? This is the return per hour. This is the cost per hour. Will you go ahead to produce? No?
No, please.
But you have to do the calculation before. So 9.3 divided by 12. What are you going to be getting? Okay, there is no space there.
0.775.
Okay. 0.775. So can we say 0.78?
Yes.
Okay. So this 0.78 means that for every 1 CD, of the factory cost that you are going to be using, we're giving you a return of what? 78 pesos. It will be giving you a return of what? 78 pesos. You are going to be spending more than you are getting. That is the implication of this. So the throughput accounting ratio is talking about a return that you'll be getting for every 1 CD of the factory cost that you are going to be what? You are going to be using. For every 1 CD of the factory cost that you are using in the production process, what is the return that you are getting? That is what the throughput accounting ratio measures. So looking at this one, you can see that we cannot produce this particular product because we are going to spend more than we are getting. We are going to spend more than we are getting. Let's take additional question on the single product. Then we move on to multiple products. The multiple product is just like the limiting factor. So if you have done limiting factor before, you don't have any problem here. We just do the ranking like that. Find your contribution, find your bottleneck, find your contribution per the bottleneck. Then you now rank based on what? The highest and then the lowest. All right. Let's take the question 17.
Hello, sir.
Yes, now.
Sorry, you said something concerning the factory cost. There are times you might not be given the factory cost and you have to add up the material cost, fixed cost, and others. Can you please come on that section? I couldn't get you.
Okay. So I said that sometimes they will not give you the conversion cost or the factory cost. Okay. They will not give you that one and you have to calculate it yourself. But we know that the factory cost or the conversion cost, material is not part. And that throughput, material is the only variable cost. Is the only direct cost. Material is the only direct cost and that throughput. So what it means is that labor cost, variable overhead, all those things are treated as what? As a conversion cost or factory cost. So your factory cost will now be calculated as so you count to the factory cost or the conversion cost will now be calculated as, then you count your direct labor cost. direct labor cost. Sometimes the question can tell you that the direct labor cost should be calculated based on what the total product. Sometimes they will not say anything. Then it means that though the direct labor cost is variable, it will still be variable, but it will not be part of the direct cost. So if you are using 20,000 hours, but the budgeted hours is 25,000, and the question did not say that labor cost should be calculated on a total hours material, then you are going to calculate the labor cost on the hours used. You calculate it as if it is variable, the variable cost, but you add it to what? Factory cost. It doesn't mean that the conversion costs are fixed. No. Just that we take them as value addition. They are adding value to the customer, not the company itself, because the company is just using the raw material. Okay, so the question will tell you that labor cost should be calculated on the total what, or on the budgeted what, production. In that case, you calculate it on the total labor hours. But if nothing is being said, then you ask yourself, how many units were produced? What should have been the labor hours for the units produced? Then you calculate it based on the variable way of calculating the labor hours. You look at the labor hours for the unit produced multiplied by the rate per hour. So you have the labor cost here. Then you have variable overhead. You have variable overhead. Variable overhead is always calculated on what? On labor hours. Okay. Then you now come to the fixed cost or the factory overhead. Okay. Then you now add it. Then you now have your factory cost or your conversion cost as a total. Okay. So most of the time the question will not give you, or the question can give you. Then you have to use it. But if you're not giving, you have to calculate it yourself. All right. But that we'll do that.
Okay. Thank you.
We do that under the multiple one. Let's come to question 17. Who is taking the question 17 for us?
Question 17. I read.
Right.
The Links Limited uses Throughput Accounting Techniques for efficient allocation of scarce resources. In the second quarter of 2021, the throughput per bottleneck resource for its three products were given as follows: A, 4 Ghana cedis, B, 6 Ghana cedis, and C, 9 Ghana cedis. The total factory cost was 67,500 Ghana cedis, and the bottleneck resource was 15,000 machine hours. Calculate and comment on the throughput accounting ratios of the three products.
Okay, you can see that this is very simple. What do you need? What do you need to produce? You need to calculate something. You can see that they have calculated one already for you. And you need to calculate another one for you to be able to find the throughput accounting ratio for the three products. What are you going to calculate yourself?
The factory cost per
The factory cost per
Factory cost per
Okay, so you need only the factory cost per bottleneck, because they have calculated the throughput per the bottleneck already for you. You don't have to go and do anything. So you just have to calculate your factory cost per the bottleneck. So let's do that. Let's take that, the factory cost per the bottleneck. Okay. So the factory cost per the bottleneck. So we are going to be having what? What will be the cost? What is the cost available? Auntie Jocelyn, your hand is up.
Yes, please. Please, I wanted to understand clearly what exactly is the factory cost.
The factory cost is the conversion cost, the fixed cost, labor cost, any cost that you are going to incur relating to production. So distribution costs are not part, administrative expenses are not part. Other production costs. That is what we are saying the factory cost. Costs that you are going to incur to the factory, production cost. If you have supervisor in the factory, the salary of the supervisor will be treated as what? Production overhead. It's part of the production overhead. So all those costs that are incurred in the factory relating to production. So the variable overhead, the labor cost, the fixed overhead or fixed production overhead or something like that. So all other costs relating to production apart from what? Direct material cost. That's what we are calling the factory cost. Can I move on now? Please, can I move on? Auntie Joycelyn. Auntie Joycelyn, can I move on? Auntie Joycelyn. Okay.
Please, you can move on now.
Okay, thank you. So what is the cost there? What is the cost there?
67,500.
67,500. What is the hours available?
15,000.
15 or 16?
15.
1.5.
Okay. So what will be the cost per the hour?
4 cities.
Okay. 4 cities, just 4 cities, or something is on top.
4 cities, 50 pesos. 4.5.
Okay. So 4.5. So you come to the throughput accounting ratio, you do it one by one. You do it for this one by one. So we have the throughput accounting ratio for the first product. What is the first product? The first product is what?
Product A.
A.
So we have the distance is 4 over 4.5. Am I right? Am I right with the 4 over 4.5? Okay.
Yes.
Okay. So what are we going to be getting?
$0.89.
89.
0.89. Okay, let's count to B. B, are we going to be having 6 over 4.5?
Yes.
Okay. The C, are we going to be having 9 over 4.5?
The B, 1.33.
1.33. Okay. So the
Yeah.
last one will be 2. Or would the C be 2?
Yes.
Okay.
Yes.
Okay. C will be 2. Assuming they are asking you to allocate, okay, what are they saying? They say you should calculate and do what? Let's look at what they are saying. Okay, they say you should calculate and comment on the throughput accounting ratio of the 3 products. So which of the 3 products are going to be giving us a higher return?
The one with the 2.
Okay, so assuming the company wants to what? The company wants to produce any of these products, or they want to produce any 2 of these products. Which of these 2 products are they going to be producing?
C and B.
B.
You see the comment that they say you should comment. The comment, the word you should comment doesn't mean that you should be explaining. You should be explaining what the ratio means. No, you are doing this for what? 2, or you are doing this for 3 products. Okay, you are not going to be saying that. Okay, the first one, the A is going to be giving us 89 pesos for every 1 cedi of the cost. Okay, and you'll be saying that the B is going to be giving us 1.3, 1.1 cedi, 33 pesos for every 1 cedi that we are using. It means that we are getting additional 33 pesos as a return from using what? Or from producing that particular product. And this one is going to be giving us what? Additional 1 cedi as a return. After we settling the factory cost, what will be the remaining return for is to be 1 cedi? No, that is not what they are saying. This is if it should be only 1 product, then you can say that this one is giving us what? 89 pesos for every 1 cedi that we are using. But they are saying that you should comment. It can be an advice. You should advise because the question says that a company used throughput accounting ratio to allocate what? Scarce resources to what? Each of it to each what? 3 products. So they are now asking you to calculate the throughput accounting ratio for this one. All right. So the throughput accounting ratio, you are getting 0.89, 1.332. Okay, you can say that if the company want to produce this product, okay, the C is giving us what? Two for every 1 cedi of the factory hours that we are using. So therefore, the company should produce C first. Okay, if they have other resources or there will be available hours left on the machine, then they should produce what? B. Then if it should be any one that will be left, then they can use the remaining one to produce what? To produce the A. But if the machine hours can only produce B and C, then they should produce B and C. But if they cannot produce B and C, then they should produce C first. The remaining hours should be used to produce what? B. Okay, so the comment on the answer doesn't mean that you should be explaining what the throughput means. You can explain, but this is a 3 products given to you. You should advise which of them they should what? They should produce. All right, you should advise which of them they should produce. All right, let's come to multiple products. How do we use throughput accounting to make selections between what? Multiple products. How do we do that? Okay, you have, let's say this one, you have product A, B, and C. Okay, you want to produce 20,000 or 2,000 of this, 3,000 of this, and you want to produce 1,500 of this. The hours per unit is 3 hours. This one is 2 hours. Okay, and this one is what? 1.5 hours. Let's calculate the total hours that we need to be able to produce each or all the units of A, B, C. What is the total hours that we need? This one will be 6,000. Am I correct? Okay, this will be 6,000. Am I correct with that? Okay, 1.5 times 1,500. That will be 2,250. Are we correct? Okay, so the total hours required will be what? 14,250. Are we okay? Is it 14,250?
14,250.
Okay. Okay. So if we are able to have all the 14,250 hours, it means that we can go ahead to produce the demand for each of the 3 products. But right now, let's assume that the hours available is now 10,000 hours. So it means that we can't produce all the units for the 3 products. We have to now make a decision to which of them that we are going to produce and which one should we produce. Which of these products should we produce all the units for? And which of them we should produce parts and which of them we should not produce at all. So we are now coming to base our decision on the return that we are going to be getting. So let's assume that for this one, the contribution that is given to us is what? Is 5 cedi. Let me use so that we can get, let's assume that this is 6 cedi. The contribution that we are getting is 6 cedis. Okay. This one, let's assume that the contribution that we are getting is 4 cedi. Okay. Okay, let me say is 3 cedis. The contribution per the bottleneck is 3 cedis. And this one, let's assume that it is 4 cedis. Okay. Right now, you cannot say that this is giving you 6 cedis, so you are going to produce this one. You have to take into consideration the number of hours that you are going to be using. If their hours requirement should be the same, then it means that you are going to be using 2 hours for each of them. So you can go ahead to produce A first, C second, and B third. But they are not using the same what? Hours. The labor hours requirement is not the same. So you cannot say you are going ahead to produce one. But you ask yourself, I'm getting 6 cedis per unit. How many hours am I using to produce this? I'm using 3 hours. So what will be the contribution or what will be the return per the hour that I'm using? What will be the return per the hour over here for the A? This will be 2, okay? Then the return per hour for B, it will be what? Okay, 1.5. Then what about C? What will be the return per hour?
$2.6.
2.7.
Okay, let's make it 2.67. Okay, so right now you are able to now find the return per hour. So all of these are now in per hour. All of these are now in per hour. So you can go ahead to make your decision done, doing 6 hours for 6 cities for 3 hours, 3 hours for 2 hours, and 4 hours for 1.4, 1.5 hours. No, the hours are not the same. So you cannot make decision at this level. So you have to now make it, they should also be having a common what? A common basis. And that basis is not per hour. You can see that everything over here is per hour. It's for 1 hour. They are all for 1 hour. They are all for 1 hour. So you cannot make the decision because the hours are now 111 for each of them. So which of them are we going to be producing first?
C.
Okay, we produce C, isn't it? Okay. If we produce C, we are going to be using 2,250 hours. How many hours will be left? It will be left with what? 7,750 because the hours available is 10,000. Are we okay with that?
Yes.
Okay. What will be the next one that we should produce?
A.
Okay. If we produce A, we are going to be using 6,000 hours, isn't it? A, we are
Yes.
using 6,000 hours. The hours that will be left will now be
1,750.
1,750. So it means that we cannot be able to produce all of this, isn't it? Okay. So we now have to determine how many units can we produce from what? 1,750 hours. Look at this one. 1 unit is equal to how many hours? If you are producing 1 unit of C, how many hours are you using? 1 unit of C, how many hours are we using?
1.5.
Okay, we are using 1.5. So 1 unit is 1.5 hours. Okay, so how many units will now be what? 1,750 hours. How do we do that? The X will now be 1,750 divided by 1.5. What are you getting?
11,6.7.
Okay, so 1,750 divided by 1.5. So you do 11, you produce 1,166. Okay, you can make it since it's units. You can just, maybe sometimes you can produce half. You can produce half on something. So if you are producing sugar, you can produce half carton. But this one, let's just make it to be 1167 or something like that. So this is what you are going to be producing. So your production level will now be what? Your production plan will now be, they can ask you to prepare the optimal production plan. So that will be the full of 2,000, the full of 2,000 of A, then full of 2,000 of B, then you produce 167. So sometimes you multiply them by the hours to put the hours there. That's how you go about it. It's the same thing like limiting factor. But for throughput, what we use is that we find the contribution per the bottleneck, not the contribution per the limiting factor. And the definition for the contribution for throughput is the revenue minus what? Or the selling price per unit minus the direct material cost per unit. We use direct material cost per unit. Sometimes they can give you the direct material. They can give you the value. So they will say the direct material cost is 3 cedi per kilogram. Okay. And they will give you the kilogram per unit. So they can say if you want to produce 1 unit is what? Is 2 kilogram. Okay. So 2 units is what? 2 kilogram is 1 unit. 2 kilogram is 1 unit. Let me put it over here. They can say that 3 cedi per kilogram. Okay. Then they will give you the material requirement per kilogram. So they can say 2 kilogram per unit. Okay. We know that 1 unit is what? 2 kilogram. But if you are buying 2 kilogram, you are going to be spending 6 cedis. And that 2 kilogram that you are buying is 1 unit. So the cost per unit will be 6 cedis, which is 3 times 2. Antiba, I saw your hand up. Auntie Ba, I saw your hand up. Or is a mistake?
Okay, so please, with the illustration we just did, the last aspect, you see, we first chose the C since it had the higher return per hour. Then we chose the BA, then the B was the last. So I was thinking that the hour per unit for the rest, the remaining hours left, we were going to use the hour per unit for B, which was 2 hours, but we used the 1.5. I don't understand that aspect.
So which one are we producing? We are producing C first, isn't it?
Yes, please.
Then we produce A, isn't it?
Yes, please.
Okay, so the 7050 should be for B. Sorry.
Yes.
Okay, so it's supposed to be 2 hours, isn't it?
Yes, please.
Okay, all right, okay. So it's supposed to be 17. Yes, it means that you are following. Most of us, we are not following. Okay, so yeah. So the C is the first one that we produce. Okay, then we produce B. Then we put, okay, it's supposed to be this one. Okay, thank you. All right, so that is it. It was going back to the border and coming back. And the heat in Ghana too, you see, you easily forget the things. Okay, so we produce C first, then A, then B. So it should be 1750 divided by 2, not that particular one. Okay, but just illustration, there's no question that we are solving. All right, so this is how we go about it. So we use the throughput, or we use the throughput per the bottleneck, or the contribution per the bottleneck to determine which of the product that we should produce. That's what we do for the multiple products. So let's see if we can solve 2 questions on that and see how far we can go about it. Okay. So let me come here. Okay. So these things are not necessary. So you see the bottleneck, identify the bottleneck constraint, which is the limiting factor. Calculate the throughput contribution per unit for each product. So we have calculated that. Then calculate the throughput contribution per the unit of the bottleneck resource for each product. Something that we have done. Rank the products in order of the throughput contribution per unit of the bottleneck. Allocate resources using this ranking and answer the question. That's what we have done. All right. So this question is very simple for us. Let me see. Okay, let's try this example. Within 10 minutes, we can finish that. Then we go and look for questions. This is just an example illustration. So we go and solve questions, not this one. So someone should take this one for us. Let's move from simple to complex.
The following data relates to 2 products manufactured by DGA Limited, product X and product Y. Selling price per unit, 15 for product X and product Y, 20 cedis. Direct material cost per unit, 10 product X, 10 and product Y, 11. Maximum demand, 25,000 for product X and 30,000 for product Y. Time required on the bottleneck, hours per unit, product X 2, product Y 6. The firm has 80,000 bottleneck hours available each period. Total factory costs amount to 128,000 in the period. Calculate the optimum product mix and the maximum profit.
All right. So sometimes you see this particular question, they have given us the bottleneck, isn't it? They have given us the bottleneck to be the hours available. But sometimes you also have to, they can give you maybe the quantity of materials available. They can give you the labor hours. They can give you machine hours. So sometimes you have to also test and see whether it's the labor hours that is the bottleneck, the material is the bottleneck. Sometimes you have to do that yourself. Okay, let's try and see whether there will actually be an issue with the hours available. if you want to produce all the units of product X, what will be the total hours that we'll be using? What would be the hours required? Total hours required to produce all the 25,000 units of X. What will be the hours that we'll be using? The total hours. What will be the total hours? Please, can you hear me?
$50. 50,000 hours.
It will be
50,000 hours.
okay. That will be 50,000 hours. So that will be 25,000 multiplied by the hours per unit. What about this one? The product Y.
180 hours, 1,000.
Okay. So what will be the total hours that we'll be needing to be able to produce all the units of product X and Y?
230,000.
230,000. But the hours available is what? Is 80,000. So it means that we cannot produce all. And before we can know the one that we have to produce, we have to look at the return that they will be given to us per the hour. So we have to go now and solve the question. So the first thing is that you determine the return that each of these. So let's come to example. Okay. So you now come here and have product X. Then you have product what? Product Y. So you put your currencies on here. Please mostly find the contribution per unit. So if they have given the thing to you on total basis, you have to now find it on what? On unit basis. So let's come to the selling price. What is the selling price per unit? The selling price per unit for the first one. 15 and 20.
15.
And 20. So 15 and 20. What is the material cost? Material cost, would that be 10 and 11?
10.
Okay. Material cost is 10 and 11. So we are subtracting, isn't it? All right. What are we going to be getting? For this one, what will be the contribution per unit? The throughput contribution per unit. 5 for X and 9 for these people. So what do we have to find next? We have to bring the bottleneck. You have to find, okay, let's go and check the hours that we are using for each of them. We are using 2 hours for X and we are using 6 hours for what? For Y. So the 5 that we are getting over here, we are using 2 hours to get that. So how much are we going to be getting per hour? So we bring the bottleneck here. We bring the bottleneck here. Bottleneck in terms of hours. Then you do what? You put a 2 here. This will be 6. What are you finding? We are getting a contribution of 5 cedi per unit, and every unit we are using 2 hours. So what will be the what? The contribution per hour for X. Contribution per hour.
2.5.
Okay. That will be 2.5. Then we come to what? Y will give us what?
1.5.
1.5. Okay. So which of these are we going to be producing first? Which one will be produced first?
Product X.
X.
Okay. So we have the contribution per the bottleneck. Contribution per the bottleneck. So that will give you, so we rank. You now do the ranking. So this will be first. This will be first, and this will be second. Okay. So let's now go to the product mix, the optimal product mix. Okay. Let's come to the product mix. It's very simple. If you understand this, if we go to short-term decision making, especially under limiting factor, you are not going to be suffering because they follow the same thing, but just that the contribution under the limiting factor is calculated as the the selling price minus total variable cost. So in that case, we include labor and variable overhead there. Okay, so let's now come to the products. Let's put a column here. Let's have a product. Let's have the units. Let's have the hours. Then let's have the total hours. Okay. So product, we are producing product X first. How many units are we producing? Product X. How many units of product X are we producing?
25,000.
20.
25,000.
Okay. We are producing 25,000. So how many hours are we using to produce one? 2 hours, isn't it? Okay. So that will give us 50,000 hours. Are we okay?
Yeah.
Okay. So how many hours will be left? We have 80,000 hours available. We are using 50 for product X. How many hours will be left?
30.
Okay.
30.
It will be left with 30,000 hours. Okay. This 30,000 hours, you now have Y here. Then you have 6 hours here. How many units are you going to be producing with the 30,000 hours of product? How many units of product Y
1,000.
are you going to be producing with that? Okay, that will be 5,000. How do we get a 5,000?
5,000.
It is the total hours divided by the hours per unit. That's how we get it. So 6 hours is equal to 1 unit. 30,000 will give us how many units? So you just do your, so this will give us 5,000. Okay, so you will now do your total here. You will now do your total here to be total here. We now have the 80,000 hours. Then you now have total units of 30,000. Okay. Then that is it. But let's count to the profits. The profits that they are. Let's look at profit statements or statement of profits. Okay. Please, the profit statement, what are you going to be doing? Do it one by one, or you can do it on a total basis for the two. You can just add their figures and total, but do it one. That will fetch mark for you. Okay. What is the contribution per unit for, what will be the contribution per unit for X?
5.
Okay, 5. And how many units are
5.
we, how many units are we producing?
25,000.
25,000. So the total contribution now will be 25,000 multiplied by 5. What are we getting?
125.
Okay, 125,000. Please, if you want to do, those of you that want to do, you bring your selling price first and you bring your what? Direct material cost, then you get your contribution. You are wasting your own time. Okay, you can do it like profits, selling price. You bring your revenue, then you bring your material cost, then you bring your contribution. At the end of the day, you'll be getting a contribution. You only solve the question like this if you are doing it for the first time. You don't know the contribution, or you are going to do workings for the contribution. We have already calculated the contribution. So nobody's going to penalize you for bringing the contribution direct over here. Okay, so let's come to this one. We are producing only 5,000. What is the contribution that is given to us? I'm sure it's 9. Okay, so that will give us 45,000. Okay, what will be the total contribution?
170,000.
1 and what? Okay, 170,000. Okay, then you now bring your factory cost or the fixed cost. Okay, you can have other fixed costs, which can be selling and distribution. You bring all of them, but in this particular question, they have given us only one, which is the total factory cost of 128,000. The factory cost, you cannot apportion it to any of these people. So you just bring it to the total side here as 128,000. What will be our profits? $42,000. Is that correct? Okay, please don't say you are going to apportion the 128,000 using any ratio. The question is not telling you anything. So the 128,000 is being incurred for the two products. So just take it to the total column and find, unless they are telling you that you should be able to apportion this. So if they ask you to apportion it, then you bring the 111 over here before you take it to the total column. Yes, maybe. I feel hand up.
Hello, sir.
Yes, yeah.
Is the product makes the same as the production plan?
Yes, please. Are you okay?
Yes.
Okay, so it's the same as the production plan or the optimal production plan. Okay, how you are going to mix the product before producing. So that is the same as the production plan. Okay, all right. Let's take another question. This is our illustration. Let's go and pick questions. Okay, let's calculate. Okay. Okay, let's look at question 23 and 24. I wanted to look at question 25 is not for you people. Is very cheap. So that one you can try it on your own. I want to okay. So I want to read this one, question 26. I hope you can do that one on your own. Okay, that is for single products. I hope you can do that. I want to pick a question where you will do the calculation for the labor hours yourself. So I don't know. Yes, I want to. Sometimes they will not give you, you have to calculate the labor hours yourself. So I'm looking for a question that I have to calculate the labor hours ourselves. Okay, we have to calculate the factory cost ourselves. Or maybe I can give that one to you as an assignment. You see, that is what most of the teachers they do. They will solve the simple question in a class and give the difficult one to you as an assignment. So don't worry, it is normal. So I want to solve a question. The question 25 and 26. So you can try that one. This one is for multiple product. This is for single product. It's very simple. Which one do I use? Let me see. Okay, using the traditional factor. Okay, that one we haven't done the limiting factor yet. Okay, let's see. Let's look at question 23. And then we'll pick another one. I have to do for the standard costing, I have to finish the theory today so that Sunday we just start with the calculation. Okay, question 23. Question 23. Who is taking that for us?
Question 23. I read. The following data relate to the single product made by Spiral Limited. Selling price per unit, 16 Ghana cedis. Direct material cost per unit, 10 Ghana cedis. Maximum demand per period, 40,000. Time required in hours in process X per unit 1. Time required, that's hours, to process Y per unit 1.5. The capacity are 35,000 hours per X and 42,000 hours to process Y. The total factory cost 105,000 Ghana cedis in the period. Let me take it. The total factory cost are 105,000 in the period. Required. A. Identify the process bottleneck. Calculate throughput accounting rate.
Okay. This question too is about single products, but you can see how they put it. Can you see that it's about single products? Can you see that this question is about single products?
Yes.
Okay, but just that they are using what? They are using the product will pass to what? They are using process costing. So it's now the product will pass to what? Stages or processes before it will get what? Ready for what? For sale. So they are using process costing. Okay. They are now asking you to what? To identify the bottleneck or identify the process bottleneck. Which of the process will now present a problem to us? That is what they are saying. Let's come here. What's the total units that we want to produce?
40,000.
Okay. What is the time that we have to use for the first process? For it to pass through process X, what will be the hours there? What will be the it will be 1 hour per unit, isn't it?
Yeah.
Okay. So for the 40,000 to pass through the process X, how many hours are we going to be needing?
40,000 hours.
40,000.
40,000 hours.
Okay, we'll be needing 40,000 hours. Let's come to the process Y. Process Y. Okay. Process Y, what is the hours per unit?
1.5.
1.5.
Okay. 1.5. So we are producing 40,000. How many hours do we need there?
60,000.
We need what?
60,000 hours.
Okay. Okay. So it means that for us to be able to produce what? For us to be able to produce 40,000, what will happen? How many hours of X? How many additional hours do we need in process X? For us to be able,
5,000.
okay, we need
5,000.
5,000 to make it what? Okay. How many hours do we need for the process Y?
18,000 hours.
Okay, we need what?
1,000
80,000 what? Okay. 80,000. We need 18,000 hours. Okay. The question is sometimes they can ask you how many units will be produced. They will ask you how many units will produce. How many units will be produced? In this case, the production capacity will be based on which process? Which process will the production capacity be based on?
Process Y.
No. If you are using process Y, okay, process Y will be 42,000. Okay, let's take it again. 42,000. So the process Y is 1.5. Okay, it will be based on process Y. Okay, because let's come here. If you're using process Y, how many units will be produced? We have 42,000. Okay, how many units are we going to be producing? 1.5, isn't it? Okay, so let's have 42,000 divided by 1.5. I'm getting 28,000. Are we okay? Is that 28,000 units?
Yeah.
Okay.
Yes.
Okay. But if you come to process X, you see that if you want to produce, you'll be producing 35,000, isn't it?
Yes.
But
Yeah.
would the 35,000 be able to pass through process Y? No. Because if you're using 35,000, the hours are supposed to be 1.5, but the hours available for process Y is only 42,000. So 35,000 multiplied by 1.5. That will give you 52,500. So it means that you cannot produce 35,000. The production capacity will now be based on what? 28,000 units. So you'll be left with what? 7,000 hours over here. But that one, maybe you can use that particular 7,000 to produce maybe another product that will pass through what? Process X. Okay. But let's come to the identify the bottleneck process. Okay, identify the bottleneck process. We have done that. For the process, they are all going to be having issues. They are all presenting what? A problem to us, both X and Y. For X, we need additional 5,000. For Y, we need additional 18,000 hours to be able to produce the 40,000 hours. But if we cannot be able to get that, then we have to produce only 28,000. Okay. The question now asks you to calculate the what? Calculate the throughput accounting ratio. Calculate the throughput accounting ratio. Okay, what is the contribution here? What is the contribution here? What is the contribution here? Yeah, please, can you hear me? That sure. Please, I'm back. It's the Voda network. Please, can you hear me now?
Yeah, we can hear you.
Yes.
Okay. It's the Voda. After my life in Ghana, I will not use Voda again. Okay. So what is the contribution here? What is the contribution?
Six.
What's it?
Is how many cities?
6 cities.
Six.
Okay.
6 cities.
Okay, that would be 6 cities. Okay. But what is the bottleneck per unit? If someone can be able to give me that, then we will just end the class. What is the total bottleneck there?
What is 2,000 now?
The bottleneck there, the bottleneck per unit, total bottleneck per unit.
1.5.
1.5, are you sure?
It's 4.
No, please.
2.63.
2.5.
It's 2.5. Okay, I'm talking
Yeah,
about
2.5.
total bottleneck per unit. Total bottleneck per unit. That's what I'm asking. You see that every product that you're going to be producing will pass through what? 2 processes. And these processes will be, you are going to be using hour for them. So it means that for you to get a finished product, you have to pass through the 2 processes. What is the labor hours in each of these processes? If you put them together, you have to put the 2 processes together to have the finished good. So you have to put the hours together too. So that will be 1 plus 1.5. Okay.
2.4.
So that will be 2.5. So let's now go with what? Our contribution. We have calculated the contribution already. What are you doing?
Oh, sir.
Yes, please.
Sir, is the bottleneck 2.4, 2.5?
2.5, not 2.4. Look at this, please. Time required in process X per unit is 1. Time required in process Y per unit is 1.5. So the bottleneck per unit is what? 1 plus 1.5, 2.5. Tina, are you okay?
Yes, I'm okay.
Okay. Okay. So let's move on. So let's now find what the accounting ratio. We know how to calculate accounting ratio. So we need two issues. The first one will be the contribution, throughput contribution per the bottleneck. Okay, the bottleneck. So I'll be having the throughput. Would that be? It will be 16 minus 10. Am I correct? The contribution will be 16 minus 10, and this will be 1 plus 1.5. So I'll be having 6 divided by 2.5. What are we having?
2.4.
Okay. Okay, so what you are giving is contribution per the bottleneck. Okay, 2.4. Let's now count to factory cost. Factory cost per the bottleneck. What is the total factory cost given to us? 105,000. Please don't be tempted to calculate the throughput accounting ratio for what the processes. No, throughput accounting ratio is always calculated for the material or for the product, not the process that it will be passing through. It is the material that is going to give us the revenue, not the process. Okay, so you have the 105,000. 105,000 divided by what? What will be the total hours? Would that be 35,000 plus 42,000? Am I correct? Okay, so that will be 105,000 divided by 77,000.
Yes.
Okay, so what are you getting?
1.36.
1.36.
1.36.
Okay, 1.36. So looking at this, will you go ahead to produce the product?
Yes, please.
Okay, so you can see that
Yes.
the return is higher. So we have 2.4 divided by 1.36. What are you getting? If you are calculating the throughput accounting ratio, if your answer is more than 1 or is 1, okay, if it is 1, then you have to consider. But if it is more than 1, they should go ahead to what? To produce the product. 1.76.
76.
1.6.
Confirm something for me. Confirm something. Do 2.4 minus 1.36 and see what you are going to be getting.
1.04.
Okay.
1.04.
Okay. 1.04. Okay. All right. Okay. So that is about that one. That is also about single product, but you can see that it is not like the one that we have solved. Okay. Let's now look at so I'm saying that the 24, you see that the A part, they are saying using the traditional limiting factor approach. That one we are going to do it under the short term. So question 25, you can do that. 26, you can try that. And let's now count to question 28 and 27. Okay, let's now count to 28 and 27. 28 and 27. Let's take the 28 first. Okay, so someone should just read the requirement for us because I have to do the standard costing, the introduction today. I don't want to come and read theory again. So
Required.
yes, please.
Required. A. Prepare the production plan that will maximize profit using the B. Calculate the throughput accounting assuming the conversion cost is based on the annual plan.
Okay, thank you, Zina. Thank you, Zina. So the first one is that they're asking us to do the product mix or the production plan. Okay, using the throughput what approach. So using the throughput approach, what are we going to do to know the production plan? The products are 3. So how do we determine which one we are going to be producing first and which one we are going to be producing second and which one we are going to be producing as the last one? How do we determine that, seniors?
We have to first find the contribution of each product.
Okay, so how do we calculate the contribution?
The selling price minus the direct material.
Okay, okay. So this one is, they have given you available hours. So I'm saying that sometimes you can confirm. You can check to confirm whether the labor hours is actually the what? The limiting factor or the bottleneck. Look at this question. How do we find the labor hour per unit? Look at the question very well. How do we find the labor hour per unit? How do we calculate the labor hour per unit?
So for the A to be the 54 divided by the 8 cities.
Okay, 54 divided by what? 8 cities.
The 8 cities.
So that you can see that the 8 cities is the labor rate per what? Per hour for all the products. So every product is 8 hours per hour. So how many hours are we using before we are getting 54 for what? For A. Okay, so 54 divided by 8 is what?
6.75.
Okay, 6.75. So 6.75 for this one. Okay, the second one will give us what? 30 over 8. What are we
40
getting?
over 8.
Okay.
5.
Is it 40? Sorry. So it's supposed to be 50, 54 divided by what? Divided
8.
by, that will give us 6.75, isn't it? And this will give us 5. Okay, 90 divided by 8.
11.25.
Okay, 90 divided by 8. 11.25. Okay. Okay. So what you have to do is that you can first of all try to see. Sometimes you see this 8 over here, they will give you the fixed overhead rate. And they will say that fixed overhead rate per hour is what? Is 8 cities. It means that a fixed overhead over here is being calculated based on hours. So you just have to divide this one by the 8 by the 8. Sometimes they will give you that. But this one, they have given it to you based on labor. So you just calculate the what? The hours, the labor hours per unit. Okay. So if we are producing all 3, okay, A, how many hours are we going to be needing for A? That will be 6.75 multiplied by 4,000. Am I correct with that?
Yes.
Okay. B will be what? 5 multiplied by what? 2,500. Is that correct? And C will give us 3,600 multiplied by 11.25. So this will give us what? 6.75 multiplied by 4,000. I'm getting 4,500 here. Okay. This will give us what? 5 times 2,500. I'm getting 12,000. Okay, the A is what?
27,000.
27,000. So let's add all the hours now. 27,000 plus 12,500 plus 40,500. We're supposed to be using 80,000 hours, but we have only 65,000. So we cannot be able to produce all. And what do? We now have to determine how we should produce the product. So we are using throughput. Let's move on. Let's go. So you now count to what? The ranking of the products. So you can say ranking of the products. Okay. So you have the products here. You have the product A, you have B, then you have C. Then you have the currency sign here. You have the currency sign here. So what will be the first thing that will come? The first thing that
The
will come.
selling price.
Okay, so we have the selling price per unit. Okay, selling price per unit. Selling price per unit. So selling price per unit for each of them is what? Let's go to the question. 150, 120, 230. So 150, 150, 120, and 230. So we bring the material cost. What is the material cost for each of them? Let's go there. Okay. 48, 30, 55. 48, 30, 48, 30, and 55. Okay. Assuming we are doing this for limiting factor, then we are going to bring all the other variable costs, direct labor, direct variable overhead, but we are not doing limiting factor. We are doing what? Throughput, and throughput is only the material cost that is variable. Okay. So let's come here. What are we getting? What will be the contribution, the throughput contribution?
$1,054A.
102.
102.
Okay. 1024A. Okay. 90 for here, isn't it?
90, yes.
And 175 for this place. Okay. Can we make a decision based on these ones? Can we make a decision based on these ones? Can we go ahead to make decision based on these figures? No, because the hours that we are using to get each of them are not equal. So how can you be comparing someone's performance in ICA examination for 2022? The person scored 84 in July 2022. Someone scored 84 in July 2023. You cannot compare the performance because those are 2 different years. No, you cannot compare that. There are 2 different years, and the standard of the exam can also change. But you can compare someone who wrote the exam in July 2023 with another person who wrote the exam in what? 2023. Yes, that is a perfect comparison. You cannot compare orange with mango. No, they are not the same. So the hours that we are using to produce each of them are not the same. So let's now bring them to what? To a common basis. That will be per hour. That will be per hour. So how many hours are we using to produce what? 1 unit of what? Of A. That was 54 divided by what? 8. Okay, 6.75. So the hours that we are using, let's come to the bottleneck. So the bottleneck will be 6.75. Okay, this was 5, isn't it? And this was 11.25. Am I correct? Am I correct with that?
Yeah.
Okay, so that is it. Someone is using 5 hours someone is using 5 hours to get 90 cedis. Someone is using 11 hours to get 175. And you want to say that this person is doing, the one getting 175 is doing better than this people. No. You have to ask yourself, okay, for every 1 hour, how much are they getting? So you now make your argument based on how much they are getting per every hour. Okay, so we now do the argument based on how much they are getting per every hour. So let's now look at this. If you are getting 102 per unit and you are using 6.75 hours to produce 1 unit, so what will be the value per hour? 102 divided by 6.75. I'm getting 15.11. Is that correct?
Yes,
Yeah.
sir.
Okay. Would this be 18?
Yes.
Okay.
Yes.
So contribution per the bottleneck. So you can look at contribution
15.55.
per the bottleneck. Okay, let me write this one because some people will call me and say, how did you get this one? So I want to avoid those things. Okay. Bottleneck. Please, the only way you can keep the things in your head is to be participating. Don't be there and you'll be thinking that you are following, but you are not following anything. So the only way you can enjoy the class is to be contributing. Contribute anything. If it's wrong, we are going to correct you. 15.56, is that correct?
Yes.
Okay. So based on this now, okay, they are all per hour. They are all per hour. So which of them is going to be giving us a higher return per hour?
B.
So this will now be the first. You will now rank this one as first. So we'll be producing this one. Which one will be the second?
B.
Okay, so C will be the second. Then which one will be third? This will be third. Are we okay? Okay. So let's now go to the production plan. Let's now go to the production plan. Okay. Prepare a production plan that will maximize profit using the throughput. They are just asking you for a production plan. Don't go and be doing what? And be calculating for profit. No, they didn't ask you profit. Prepare a production plan that will maximize what? Profit using the throughput ratio. So since you are able to determine this as this is how your production will be, it means that it will surely increase your what? Your profit. So let's come to the production plan. So the production plan, which one are we producing first? So we are producing B. So I'll put the product here. I'll put the unit that we are producing, the hours required, and the total hours that we are using. Okay, so we are producing B first, isn't it? Okay, how many units of B are we producing? We are producing all the units. We have to produce all the units. So how many units are we producing for B? How many units are we producing for B?
2,500.
Okay.
2,500.
Okay, we are producing 2,500 and we are using 5 hours for each, isn't it? Is it 5 hours? 5. So what will be the total hours? 12,500. Are we there? Are we there?
Yes.
Okay. Be confirming the figures for me. So which one are we producing second? Sorry, let me go here. Which one are we producing second?
C.
Okay. So the C, how many units of C?
C.
Okay. We have 65,000 hours left, isn't it? We have 65,000 hours as the total hours available. Is that the case? So hours, available labor hours is 65,000, isn't it? All right.
Yeah.
Okay.
Yeah.
But how many hours did we use out of that? We have already used 12,500 to produce what? The B. So what will be the hours left?
52,500.
Okay, it will be left with 52,500. How many units of C are we producing? Let's come here. We are producing 3,000.
3,600.
Okay. And one unit is how many hours?
11.25 hours.
Okay, so if you multiply, how many hours are we using?
40,500.
Okay, that will be 40,500. Please don't just come and write the 3,600 over here. First of all, you confirm and see whether the hours available will help you to produce all the units of C. You are going to be having 52,500 as the hours remaining. So you confirm and say, oh, what will be the total hours that I'll be using to produce C? You are using 40,500. So it means that you can produce all the C. So don't just come and sometimes you write it over here. If you multiply, you see that the hours that you have available is what? Is lower than the what? Or is lower than the total hours that you'll be using to produce that. And that is going to worry you. So first confirm before you come and write here. So what will be the remaining hours now?
12,000.
So that 12,000, we have to use it to produce what?
A.
Okay. So A, how many hours are we using to produce A? 6.75, isn't it? Would that be 6.75?
Yes.
Okay.
Yeah.
So how many units are we going to be producing?
4,000.
1,778.
Yeah, 6.75.
Okay. It will be 1778. Okay. That is the unit that we are going to be producing. How do we calculate it? 6.75 is equal to 1 unit. So 12,000 will be equal to how many units? Then you do your mathematics. It will be 12,000 divided by 6.75. Okay. So that is how this will be done. So you can total it. You can now total the units and then the hours yourself. So you can do your 65,000 here. Then you total this side too. What are you getting? I'm getting 7878. Is that correct?
Yes.
Okay. Don't ask me how I was able to get the 8.25. The 8.25 is the weighted average. I just have to do this divided by this. So 65,000 over 7878 is not the total for this one. But you just ask yourself how many, what would be the hour per unit for you to use 65,000 to produce. This one is not necessary. You can just leave it and move on. Okay. Yeah, Makafi, your hand is up.
So I'm a little confused about the way we did this one, because when we're doing the ranking of the products, we ranked C first, A second, and then B third.
Which one?
And it's like the one that gives the way we rank the products.
Which one? Are you talking about this
And the
particular product?
Yes, please. Like the way the production plan has been done.
No, C is never
So
first. B is the first one. C is never first. Look at it again.
oh, okay.
C is second, B is first,
Okay.
and A
Okay.
is third. Okay.
Okay. All right. All right. Thank you.
All right. Okay. What are they asking you to find first? Okay, so I can use this question now to tell you how you calculate the factory cost yourself. Okay, the conversion cost yourself. Calculate the throughput accounting ratio for each product, assuming that the conversion cost is based on the annual what? Demand. So sometimes they will not ask this particular one. They will not say that the conversion cost is based on the annual demand. So this particular statement will not be there. Then we do it, and I'll still do if this statement is not there. Okay. What do we need to calculate now? You can see that we have already calculated what? The throughput contribution per the bottleneck. So we have these ones already. So we just need what? What do we need to calculate?
The factory.
We need to calculate the factory cost per the bottleneck, isn't it? All right. So let's go and do that. So let's go and do that. So let's come to the conversion cost or the factory cost. Okay. So the conversion cost, the first one will be direct what? Labor. So let's come here. We are doing it for the 3 products. So the question is saying that calculate the throughput accounting ratio for each product, assuming that the conversion cost is based on the annual demand. So what will be the labor cost? We are going to do it for all the 3 products. So we do labor cost for this one and this one. So let me do the working somewhere for labor cost, overhead cost, and all these ones. Do you have to do, let's do the working somewhere for all the 3. We have to do it one by one. Okay, so let me just bring it here. Okay, so let me just say workings. Okay, so I will have products. Workings 1, I'll have products. Now I have A, I'll have B, and I'll have C. So let's find the labor cost. Okay, what will be the labor cost for A? What will be the labor cost for A? What is the labor cost per unit? What is the labor cost for per unit for A? Please, are you there?
54.
54. So what is the annual demand? They said that we should assume that it is based on the annual demand. What is the annual demand for A?
4.
4,000.
4,000.
Okay, so what will be the total labor cost?
216,000.
Okay, so I'll just put the cost multiplied by unit here. So you know that A will be 54 times what? 40,000. What are we getting?
216.
216,000. Let's come to B. What is the labor cost per unit? That is 40, isn't it? Okay, how many units are we producing? B is-
2,500.
Okay,
2,500.
so what will be the labor cost? 40 times 2,500. Are we okay?
100,000.
Okay, that will give us 100,000. The E is 90. How many units are we producing for C? What is the total unit? That was-
3,600.
Okay. What will be the total cost for this one?
3 to 4,000.
3 to 4,000. Okay. Then we now count to variable overhead. Variable overhead. Let's go and take the variable overhead per unit. A is what?
12.
A is 12. 12, 15, 30. Okay. 12 multiplied by 4,000. Are we okay? And 15 multiplied by 2,500. And we have 90 multiplied by 30 rather, not 90. So 30 multiplied by 3,600. Can someone give them to me one by one?
So for A, 48,000.
48,000. Okay.
For B, 37,500.
B is what?
37,500.
Okay, 37,500. Okay. C,
108,000.
108,000.
okay. What will be the last cost that will come here?
It's fixed cost.
Okay, the fixed overhead.
A fixed overhead.
Okay. So we have the fixed overhead. The fixed overhead is how much? What is the cost per unit for each of them? 16, 20, 25. So 16, 20. So we have A. Okay, let me put the A at the top. A will give us 16 times 4,000. Then B will give us 20 times 2,500. Then C will give us 25 multiplied by 3,600. Okay, let me go and confirm that. 25. So what are we getting for the first one? 16 multiplied by 40,000. 4,000 rather.
64,000.
64,000. Okay.
50,000.
2,000.
50,000. And the last one is what?
90,000.
90,000.
2,000.
90,000. So let's now total. You total and total again. You total and total again. Okay. So let's total them for each of them. So let's take it one by one. I'm taking the A, 216 plus 48 plus 64. I'm getting 328.
All
Okay.
right.
The C,
Yeah,
522,000.
522,000. Okay. The B,
Then B, 187,500.
187.
500.
Okay, so what will be the total conversion cost for the company? The total conversion cost for the company will give us what? The conversion.
The total is what?
The A is 328,000.
328,000.
Yeah.
That will be
Getting
1 million.
That would be 1,037,500.
37,500.
Okay. What is the total bottleneck? The total bottleneck is what? 65,000 hours. Do you agree? The total
Yes.
hours available is 65,000. So what are we going to be getting? I'm getting 15.96. So this is the what? This is the cost per. Okay, let's come here. So I said that, okay, let me calculate this one first. So the throughput accounting ratio for A. So throughput accounting ratio, let's do the A first. Throughput accounting ratio. So let's come to the B. Throughput accounting ratio for A. That will give us what? It will give us 15.11. Is that correct?
Yes.
Okay. 15.11 divided by 15.96. Is that correct? So what are you getting? And B will give us 15.96. It will give us 18. B will give us 18 divided by 18 divided by 15.96. Divided by 15.96. Then the C will give us the contribution per the bottleneck, which is 15.56, divided by the factory cost per the bottleneck, which is 15.96. Okay, the first one, what are we getting?
0.95.
0.95. The second one, 1 point what?
1.13.
1.13. Okay, let's come here. What are we getting for that?
0.797.
Okay, 0.97. Okay, so you can see that even if we are using the throughput accounting ratio to rank, this will still be the first one, this will still be the second one, and this will still be the third one. Okay, so that is all about this question. But let me come and do what I was saying. Okay, sometimes the question will not say, let's look at the question there. The question have stated that, okay, the question stated that calculate the throughput accounting ratio for each product, assuming that the conversion cost is based on the annual demand. Okay, if this particular statement is not what they're assuming that, let me come here, assuming that the conversion cost is based on the annual demand. If this particular question is not there, okay, the only cost that you are going to calculate based on the annual demand is the fixed cost, because fixed cost there, it does not vary with the output level. No matter the output level, it will still be the same, provided the cost or the production is within the what? The range of production for that particular fixed cost. Okay. But if this particular statement is not added, what are we going to be doing? You will now calculate the labor and this cost based on what the actual production. So let's come here. How many units of product B and C are we producing? We are producing 2,500 and 3,600. We are producing all of them, isn't it? So you can see that the labor cost, the variable cost, and all those things for B and C will be the same because we are producing all of them, which is the annual demand. So it will still multiply by the annual demand, multiply by the annual demand. But let's come to A. A, the total product is 4,000, but we are producing only 1,778. It means that if we are producing only 1,778, the people will work to produce only what? This 1,178. So the labor cost for A will now be, what is the labor cost? 54. It will be 54 multiplied by the what? The actual production level, not the demand. Okay, if you count to variable cost, variable overhead for that particular one, it will be 12. It will be 12 multiplied by 1,778. If you count to the fixed overhead, it will be 16 multiplied by what we are producing, which will be 1,178. So you will not use 4,000 again because you are not producing all the 4,000. You know that the labor, they are going to work for hours. So if they are producing 1,778, they will work for only 1,778 and you pay them for only that one. You are not going to pay them for the 4,000. But the question says that we should calculate the conversion cost based on the annual demand. That is why we multiply everything by the annual demand. If that question or if that particular statement is not added, the variable overhead, the labor cost will be calculated based on the production plan. It will be based on the production plan, not the annual demand. It is only the fixed cost that is going to be based on the annual demand, because if you produce one, you will still pay the same amount for the fixed cost. If you produce two, the fixed cost will still be the same. All right, so you have to be very careful with that one. But this one, the question says that calculate the conversion cost, assuming that it is based on the annual demand. So we calculated everything based on the annual demand. What if that particular statement is not there? You calculate your other variable cost, which is the direct labor, variable overhead, based on what? The production plan, or based on the production list. Okay. With this particular conclusion, I cannot solve any question on throughput accounting ratio again. We have solved about 5 questions and it should be okay. For now, you should be okay with what? Throughput accounting ratio. What am I going to be doing? We are moving to standard costing and variance analysis. But for this one, I will do only the theory part. And Sunday, we start with what? Calculation of basic what? Variances. All right. Okay, so we are coming to what we call standard costing and variance analysis. The first one that is that you have to look at what we call the standard. What is a standard? Standard. What is a standard? Yeah. Yes, it's standard. You say, oh, that is not our standard. What does it mean? I'm not talking about standard as in what? Financial reporting standards. Okay, you are saying that that is not your standard. The person has given something to you and say, oh, that is not what I want. It doesn't meet my standard. What do you mean by standard? Yes, Sina Benjamin, you were. Sina Benjamin, you wanted to say something, standard.
Yeah, I said standard will be the level that you want to, let me say, the level of production that you want, or the production, like the productions to be in the same level. If you are producing a water, the content of the water to be the same content.
Okay.
So yes.
Okay.
Rosa,
Yes, please.
standard could be your like a benchmark.
Okay.
Could
Okay.
be like a benchmark.
Okay. 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 So standard means a minimal requirements. Okay. That is okay. All right. So anyhow and any way you are all defining your standard, that is it. Okay. So if you are talking about standard, okay, we want to do something, and at the end of the day, we have gotten something. You say, oh, that is not the standard. That is not a standard. It means that we have a minimum level Even if we are not able to do anything, there is a minimal benchmark. There is a minimal target that we have to reach. So if you are producing shoes and they say we have a standard, it means that we have a target or we have a level at which we want our shoe to be. Okay, so the standard is just a benchmark against which maybe performance can be measured or compared. Okay, the people are talking about a network.
I think NTM network is good. So you guys will use NTM.
And unfortunately, MTN is not good at my side. So it's only Voda that I can use. But Voda will be okay. Soon it will be okay. I mean, they are still working on the undersea whatever cables or something. So it will come back. It will be stable. Right now, they are still they are depending on some additional lessons that they are giving them. So they are not operating at a full capacity now. They are not operating at a full capacity. That is the issue. So if you talk about standard, we are just saying that the benchmark against which performance can be measured or can be compared. All right. So we are saying that, okay, if you are writing a test and the test will be marked over, if you are writing a test and the test will be marked over 10, what will be the standard? If you are writing a test and the test will be marked over 10, what will be the standard? Seniors, can you hear me?
The standard will
be what?
standard will be 10.
Will be
10.
Are you
10.
sure? You are writing a test and the test will be marked over 10. Okay. What will be the standard? Okay, I will understand your 10. If you want to lash any student, what will be the least mark that the person will get before you be lashing the person?
At least 5 or 7.
Okay.
Normally it's below 5.
Okay, below 5, isn't it? Okay. But
Yeah.
this one is, we are not expecting the student to get 10. If you are expecting all of them to get 10, then it means that the 10 now is a standard. But we are expecting that every student, if they are able to get 5, that is cool. Okay. So you are not setting a target for them, but that will be over what? The pass mark will be 5. So we can say that is the standard that you are setting. Okay. But the standard, you have to set it yourself. The standard has to be communicated to the people that this is what we want. Not that you say that, okay, I'm giving a test over 10. So you have to know that if you pass, the standard is the standard mark is 5. No, you have to tell them that in this particular test, I want all of you to get 8. So it means that the 8 is the standard, is a target for them. Is a target for them. So if they are not able to club that, you can find out why that is the problem and why they are not able to do that. Okay, so you trying to find out why they are not doing that and what might be the problem. How can you work on that? Then we are saying that you are doing what we call, yes, so the cutoff point for university admission can also be seen as a standard. Okay, so we are saying that the standard is 8. All of you should get 8. Okay, if some people are not getting 7, some people are not getting 6, some people are not getting 4, some people are not getting 3, some people are getting 2, some people, unfortunately, they are getting 0. What are you going to do? Will you just sit there and say, oh, everything is cool, you move on? What are you going to be doing, Sinakafu? Sinakafu, what are you going to be doing?
Hello.
Yes, please.
They will be punished.
Now, so you will not find out why they are scoring 0 and those things before you punish them.
It depends, but you check if they not understand what you have taught or they did not learn.
Okay. So you try to find out why
the cause of the poor performance.
Okay. So after identifying the cause, what will you do?
You try to solve it.
Okay. So you trying to do that, we are saying that we are in management accounting or cost accounting, we say that that is standard costing. So the standard costing is basically you comparing what actual performance with the standard set or the targets and trying to what find out why the differences and trying to take actions to remedy the differences. That is what we call the standard costing. But if you come to variance analysis, the variance analysis or the variance, we are not looking for what remedy. The variance, we are just looking for the difference between the actual and the target. That is all. All right. So the question now is, if we are saying that we are going to be spending for every unit of material that we are going to be buying, standard is always set at the unit level. The budget is at the total level. Okay, we look at that. So if you are saying that, okay, for every unit of raw material, you will be spending what? 20 cedis. But someone went to the market to spend 25. Okay. What is happening there?
There is a variance.
Okay. There's a difference of 5, isn't it?
5 cedi, yes.
Okay. So you find out for this one, this particular 5, that is what we call the variance. So the 5 is just the difference between the actual and the standard. That is the variance. But you trying to find out why the person has spent what 5 Ghana cedis in excess, and you trying to make sure that next time the excess amount will reduce to 3 cedi. What you are doing, we say that you are doing what we call the standard costing. Standard what? Costing. But the variance is just the difference between the two. But you going ahead to find out why the difference and trying to correct it so that next time the difference will not be that again, or you reduce the difference. You say that what we call the standard costing. All right. So why should we set a standard, or what are the ways that we can set a standard? What are the things that we can set a standard, or what are the things that we can use to set a standard? Okay, before you can set a standard, I don't know how I'm going to ask the question. Maybe I don't know whether you are getting it. Okay. Standard can be set based, I don't know how I'm going to put it. What are the things that you are going to be taking into consideration? What will be the foundation for a standard? Okay, let me put it like that. What will be a foundation for a standard? Or if you want to set a standard, what are the things that you will be looking at? What will be the benchmark? What will be the foundation for the standard? Let me mention one so that you get what I'm trying to say. You can set a standard based on, yes, yeah.
They can base on the previous performance.
Okay. So it means that you have gotten my distance. So you can set a standard based on your previous performance. So you can use the previous performance as a reference for the standard. So you can use your previous performance. Okay. Let's come here. For management accounting last sitting, one student was able to score 74. So based on this 74, I cannot be saying that I'm expecting a student to get 80. I cannot say that I'm expecting a student to get 70, because if I'm expecting a student to get 70, no rational being will be expecting to perform poorly than what he has ever performed. Okay, so I can be saying that for management accounting right now, I'm expecting a student to get 80. So you can see that, oh, okay, the student that got 74, how did he do it? Was he committed throughout? So looking at the commitment level of the current students, can anybody be able to do it? So, but I cannot be expecting anyone to get less than 74. Okay, standard we want to improve. So I can be saying that, okay, let someone get 78. So you can see that I'm trying to set a target for the current student based on the previous one. But if none of our students has even scored 60 before, you see that telling someone to score 60 will be a problem, because it has never happened before. It has never happened before. So the company can also use their previous performance to set a standard. Okay, in a year we are able to purchase a raw material per unit for or per kilogram for what? 20 cedis. So it means that currently this is cost. This is a cost. So we can be able to what? Negotiate and spend what? 18 what? Ghana cedis. 18 Ghana cedis. But if there is no previous performance, you see that it will be very difficult for you to what? To set a target or standard unless you are taking other things into consideration. So previous performance can also be used as a reference for setting what? A current standard. What again? What again? Assuming there is no previous performance, the company is new. What are they going to be taking into consideration?
Out of the best price of a competitor.
Okay, we can also use the competitor. Okay, we can also use the performance of a competitor, or we can also use their what? Their practices. So performance of a competitor can also be used. Okay. So you are all in the same what? You are all in the same industry. You are all in the same industry. Okay. And all of you are having, maybe let's assume that you are having the same level of what? Workers. Okay. So your company, let's say that A Consult and B is your competitor. Okay. Okay. B, let's say B and C associates. Okay. They are all firms. B and C associates. And all of you are having what? Chartered accountant as employees. Okay, so it means that you can use the what? The practice or whatever the performance of B and C associate to what? To set a target for your employees, because these people over here, they are also CA, they are also chartered accountants. They are, although maybe the experience level might be different, but since they are all chartered accountants, at least you should be able to be performing closer to what they are doing. So we can use the performance of B and C to set target for what? Our employees, or to set our target that, okay, our competitor is able to do this. Okay, we can also do it. So they are able to open 3 branches last year. This year, these people, they are able to open 3 branches last year. This year, let's try to open 4. We can do it better than them. You are trying to set target based on what has been done by what? Your competitor. So we can also use the performance of the competitor. Okay, what again can we use?
Based on the firm's capacity.
Okay, so we can also set a standard based on the firm's capacity. Okay, so if you are setting the standard, okay, if you are setting the standard, whatever standard you are going to be setting, you are going to be taking into consideration the capacity. So we assume that the capacity and everything are all being what? Taken into consideration here. So you cannot be setting a target to open 10 branches in a year once your capital is only 10,000. So whatever standard you are going to be setting, capacity will already be taken into consideration. Are you okay? All right. So it will not be a point on its own. It will not be a point on its own, but it will be a factor. So maybe we go to factors that you have to take into consideration. Factors affecting what? A standard. So capacity will come there, the labor will come there, the environment in which the entity operates in will come there, and also other issues. So if the environment that you're operating in is not stable, like Ghana like this, the economic issues are not there. You see that inflation will render your standard what? Worthless. Okay, another one is that you can also take the industry practice or the industry what? Industry
benchmark.
Okay, you can also take the industry benchmark into consideration. So maybe you are in the industry that they are saying that the current ratio is 2:1. Okay, so if the current ratio is 2:1, it means that, okay, let's assume that we can be able to achieve what? 1.5:1. Okay, this is what the industry is saying, that if you are not able to achieve, this is the average that you have to achieve. Okay, so if you're not able to achieve this is the average. So you can say that, okay, if we are not able to achieve more than the average, let's achieve something like maybe 2.3:1. So the industry is saying that your sales, the average sales for a particular company in the industry is 20,000. So it means that if you are not able to sell, you should be able to sell 20,000 units. So you can say that, okay, if we are not able to do, at least we should be able to sell 20,000 or 200,000. Then if we try our best, we can be able to what the industry is saying that the average is what 20,000, 200,000. Let's try to what produce what or sell what 300,000. So you can also use the industry what benchmark or the industry averages to set what the standard. All right, let's come here. Why do you think we should be setting a standard, or we should be practicing what we call the standard costing, where you find the difference and you try to find out why and you try to take corrective action? Why do you think we should be what there should be, or let's come to advantages of what standard costing? Why do you think a company should practice what standard what costing? So advantages of standard costing. Advantages of standard costing. Okay, before that, should I look at the difference between? Okay, let's look at standard costing and budget and budgeting. Okay, you can see that budgeting to what do we do? We are trying to measure performance, isn't it? We are trying to measure our actual performance against our budget. Standard costing too, we also measure performance, or we also measure the actual performance against what the standard. So they are all taken into consideration performance measurements. We are all taking into consideration a measure of performance. That is one of the similarities between the standard costing and budgeting. Maybe they can ask you. They all aim at what? Improving what? Performance. They all aim at improving performance, because if you prepare the budget, you are going to see the actual, you compare and find the variances and try to what? Improve upon that particular one. Standard costing to the same thing. Standard costing to the same thing. Okay, what do you think will be common for them again? Standard costing and budgeting. Okay, Sinagafu.
Both are used as control, a tool for controlling.
Okay, both are used as a tool for what? Controlling.
Controlling, like for control purpose.
Okay, okay, okay. All right, what do you think will be the differences between standard costing and budgeting? Okay, both are used for forecasting. That is not bad. Okay, what is the difference? What is the difference between standard costing and what? Is someone talking?
Budget is expressed in monetary terms.
Okay.
But that is not in the case of standard costing.
Standard can be both. Okay.
Okay.
Standard can be expressed in both but mostly the standards are also in the quantitative what. Okay, so you can also say both can be expressed in what? In monetary terms as similarity. Okay, then you come here, standard, we can also say standard for what? Qualitative what? Issues. Okay, all right. One thing about the standard also is that if you are producing 10,000 units, okay, 10,000 units, and you are saying that you are going to be spending 20,000 on that, this is called a budget. So if the standard is set at the total level, it is called budget. But what will be the cost per unit? What will be the cost per unit? What will be the cost per unit?
That's 20,000 divided by 20,000.
Okay, that will give us 2, isn't it? Okay, this particular 2 over here is what we call the standard. So the standard is set at the unit level. The standard is set for particular item at the unit level. But the budget is being set for a total level. We are just looking at the total level. Okay, so if you have a total like this is a budget. But if you have the unit price, that is the standard. So we normally derive what? The standard from the budget. We normally derive the standard from the budget, because they will give you the total. We just divide, then you have the budget. So standard is always set at the unit level. We measure the performance at the unit level, but for budget, performance is measured at the what? At the what? At the total level. At the total level. Let's come to advantages of what? Of standard costing. I want to finish the introduction, the theory part today. I have about 24 minutes. Exam advantages of standard costing. So I don't. Okay, it improves performance. It improves what? Performance. Okay, someone can also say it helps to control what?
Cost.
Cost. Okay. Okay.
Can be used to value inventory.
Okay. It can also be used as a measure inventory valuation. Inventory valuation. It can also be used to motivate what people, because if you say target for people, if you say standard for them, they will feel like what they want to achieve that, so that they will say that okay, they are on top. It's a form of what? It's a source of motivation. So it can also be used to motivate what? Employees or staffs. Okay. It motivates staffs to achieve. When you achieve the target, you know that feeling. If I'm saying that I'm expecting someone to get 80 in management accounting, and you have actually gotten the 80, you know that feeling. You know how I'm going to hype you, and you know how you are going to feel. Okay, so that can also be achievement of the standard, will be serving as what? As a motivation factor to the employees. Let's come to the disadvantages. Let me just go and pick that one. Standard costing. Okay. Let's come to the disadvantages.
Can we say it is time consuming?
Yes, it's time consuming. Okay. It might also be expensive. Some of the people over there might not be able to set accurate or standard. So you might be needing an expert. And even if you are setting standard for maybe all the cost items, it means that you have to now take your time to be looking at them one by one, and that is going to take your time too. And that you might even employ a lot of people to do that for you. Okay. Okay. It makes possible research where may lead to what? Overstretching on the existing staff and other resources. So sometimes if you are setting ideal standard, we are going to be looking at types of standard. If you are setting ideal standard, a standard that has no room for what? Losses. No. No. All right. So we are saying that sometimes it might lead to what? Overstretching on the existing staff and other resources. We call something ideal standard. A standard that is being set under perfect working condition. There's no room for mistake. There's no room for what? Mistake. And sometimes if the standard is being set, the standard might be higher than what? The employees that you have. And those people have to go extra mile to be able to what? To achieve or to try to achieve that. That might be pressure, or you might be what? Overutilizing them. They have to now squeeze themselves to get whatever you are asking them to do. So yeah, please, can you hear me? Okay.
Yes, sir.
Yeah, Charlie, the network doesn't want to support me, so you can read on the disadvantages. Let's move on to the types of standard. That is one of the areas that they have been asking about advantages and disadvantages, and they can still ask. So you just have to understand this very well. Let's come to the types of standard. What are the various types of standard that can be set. And I mentioned the one first. I said the ideal standard. Ideal standard. The standard that is being set under a perfect working condition. There is no room for mistakes. There is no room for losses. There is no allowance for losses. So if you are a tailor and you have been making dresses for people, and the person can use how do they measure those things? Is it 2 years or 3 years or something? The ladies here, how do you measure those things? Is that the person can take 3 years, top and down? Top and down will take what? How many years?
3 years.
Okay. So top and down. Okay, top and down will take 3 years. So you as a seamstress or as a dressmaker, you are saying that you go to the market and buy all the 3 years. You go to the market and buy all the 3 years. Meanwhile, the top and down for the person is the 3 years. You are going to the market to buy all the 3 years. It means that you are not making any room for what? For mistake. There might be some mistake in the cutting, but you are saying that you are going to use 3 years to sew the dress for the person, top and down. So you are setting a standard, or you are saying that I will use 3 years to sew this particular dress. You are setting a standard that we call what? An ideal standard. There is no room for mistake. What if in the process of the cutting, by mistake, your hand took a different direction and you cut a different place? What are you going to be doing? So ideal standard is a standard that is being set under perfect working condition. There is no room for what? For mistakes. There is no room for what? Losses. There is no allowance for losses. And ideal standard will always result in what? In what? In adverse variance. It will always result in adverse variance. It will always result in what? In a negative outcome, because you cannot be perfect in cutting the cloth, and you will not be able to do any mistake. Okay, so what do you have to do? So if you are saying that you are not going to be setting the ideal standard, then you have to come to what we call the attainable or the normal standard. So you know that you are going to be using 3 years to sew the cloth for the person. So if you are going to the market, you are going to be buying 3.5 years. Okay. Why are you buying 3.5 years? You might make mistake in the process. So if you make mistake, the half year will cover the mistake. So a standard that is being set under a normal working condition, where there is a room for mistakes, there is allowance for losses. That is what we call the normal The normal standard. That is the normal standard. So the attainable standard is the opposite of what? Is the opposite of what? The ideal standard. And they can ask you the difference between the ideal standard and the attainable standard. Or they can ask you to state and explain what? Two types of standard, or they can list them for you and ask you to explain. Let's come to the basic standard. The basic standard is a standard that is being kept for a particular period of time. We don't change it. Okay, so what we do is that, okay, we are going to be setting a standard for 5 years. We are going to be setting a standard for 5 years. So if you set a standard for 5 years, for a duration of 5 years, we say that is a basic standard. That is a basic standard. Okay, or you can set a standard, or someone can say it's a fixed standard. It's a standard that you are going to be setting, and there will not be any revision to the standard. So maybe you set a standard for 1 year, there will not be any revision throughout the year, although conditions or situations or a lot of things will be popping up, but you are still keeping that particular standard. That's what we call a basic standard. So it can also be set for maybe 5 years. You are not going to do anything. Since you are setting it for today, it will be like that for the 5 years. No revision, nothing will be done about it for the 5 years. That's what we call a basic standard. Okay. Okay, let's come to the current standard. Okay, the current standard is a standard that we are using currently. So it is always prepared for a current situation. And current standard are always prepared out of the basic standard. So what we want to achieve now, today, what are we doing today? So if you prepare a standard for today, that is a current standard. So that is a current standard. Okay, what are we going to be doing? Current standard, that is a current standard. Okay, so current standard is based on current performance levels, current wastage, current inefficiency, just for the current performance. We are preparing it for the current issue at hand. That is what we call what? The current standard. All right, so we have only 4 types of what? The standard. We have ideal standard. We have the attainable or the normal standard. Then we have the basic what? Standard. Then we also have the current what? Standard. What are the things that you have to take into consideration before setting the standard? So someone mentioned what? Capacity of the business. Okay, the capacity of the business in terms of it can be the plant, the labor, and those things that you have. Okay, you have a machine, you have a plant that can produce up to 25,000 units. Okay, can you set the standard to produce 28,000 units for a year? If you are going to set a standard for production, would the standard be more than 25,000? Would the standard be more than 25,000 if you are setting the standard for production? Your plant, the maximum capacity is 25,000. Can you set a standard to produce 28,000? Please, can you hear me?
Yes, sir.
Okay, can you set a standard to produce 28,000? The maximum capacity that I'm saying that the maximum capacity, you have a plant that can produce what? 25,000 units a year. And you are going to set a target, you are going to set a standard for the year. Can you set a standard as a production level of 28,000?
No, sir.
No. So whenever you are going to set standard, you have to look at your what? Your capacity in terms of money. It can also be in terms of labor. You just started production, or you are a new firm and you are aiming that at the end of this year, you want to expand to what? 10 different regions. How? Do you have money? You don't have the capacity. You can have money, but you have to be in the market. You have to be in the industry for some time. You don't have the experience. Some things are not there. All right. Another one can also be the environment in which the entity is taking place. The environment in which the entity is operating. The environment in which the entity is operating. Okay, the environment in which the entity is operating. What do you think they are going to be talking about the environment? What has to do with the environment? If you are
has to do with the political environment or like a place that will conducive for your operations in case of you getting easy access to the resources that you will needed for your operations and others.
Okay. Okay. So the environment can deal with cultural issues. It can also deal with legal issues and all those things. Okay.
And also availability of resources within the environment.
Okay. So those are all the things that you'll be taking into consideration. If you are selling pork, which part of the regions that they don't take pork?
Northern region or within Muslim Islamic communities.
Okay. So if you are selling pork within Islamic community, what target are you going to be setting for yourself? What standard are you going to be setting for yourself for the day? No, if you sell standard that you are going to sell 2 cedis, and then your sales for the day will be 2 cedis, you will not even get a 2 cedis. Nobody is going to buy. It's because of the environment. So the environment can also influence the kind of standard that you are going to be setting. The environment can also influence what? The kind of environment that you are going to be what? The kind of standard you are going to be also be setting. Another one is the market conditions, because it can sometimes be what? Uncontrollable. So the market conditions, we have to talk about the demand and the supply issues. So you are into, or you are into what? Trading of what? Seasonal items. Maybe maize. You are what? You are into maize. You are selling maize. You see that there is a time that there will be a market for maize, and there will be a time there will not be a market for maize, isn't it? So you have to know when to set this particular standard and when not to set this particular standard. So sometimes the market conditions, the prices also, the level of the prices also might also be an issue. If you are in Ghana and the economic issues, the prices are increasing anyhow, you have to be very careful with the standard you are going to be setting. All right, let's also count to the source of revenue or the source of finance. Where do your money always come from? Where do your money always come from? If you are using debt, if you get your sources are maybe from borrowing, you are getting money from people. You cannot be saying that at the end of the year, we want to expand to what? 10 different regions. Nobody will be willing to borrow you money to be able to expand your business to that particular what? Level. All right. So let me see if those are the okay. So let's come to standard costing in the modern what? So last time we spoke about what? Standard costing and okay, microeconomic. Okay, that's nice. Last time we spoke about standard costing and just in time and also total quality management. Okay, a situation where companies are now using just in time, they only produce goods when there is a demand for it or when there is a need for it. They produce as when the product is needed. It means that these people are keeping zero stock. So we cannot set a standard for price because we are going to buy and that is the end. So we cannot say that we are going to be setting the standard. Why are we using as a benchmark for the standard? We don't keep raw material. We only go there and buy the quantity that we want to use. That is the end. So what are we going to be using to set the standard for? No. So standard costing for some modern management accounting approaches or techniques, standard costing will not be applicable. One of them is what? Is the just in time. Just in time. And standard costing, standard sometimes can be set for what? A whole year without any revision. But let's now count to this particular level now. Let's now count a particular level now. Prices can be increasing anyhow. It means that you have to be revising your standard every day. You have to be revising your standard every day. So standard cannot be set under what? Unstable what? Environment, unstable economic what? Situations. It is being, those days, the environment is very stable. So you can set a standard and you can use that particular standard for a whole year or for maybe a 2 years period. Nothing will happen. But now that things keep changing anyhow every day, it means that you have to be revising your standard every day to reflect whatever is happening. Another one is we also set standard to control what? Workers. We want to know how much that we are going to be paying for the people. Okay, our workers now we want to pay 200 cedis to them. At the end of the day, how much was spent? So we can set standard to control cost relating to what? To workers. Now companies are now using what? Machines, automated systems. How do we control the automated system? Can we control them? Machines, can we control? No. So standard cannot be set for those particular items. Standard will be set for what? Items that we can control. Automated machines. Now production process is what is highly automated. Standard setting will be very difficult under what? Under those what? Conditions. Okay. So what we do is Sunday, by the grace of God or God being so good, we will look at the basic standards and we look at it. So please, if you are coming, revise your what? Your flexible budget very well, because if you understand the flexible budget, there is nothing that standard costing will be given to you again. There's no problem there because everything will be based on what the flexible budget. We'll be flexing our budget to reflect the actual performance and compare. That's what we are going to be doing here. So what is our budget, which is a standard, because it will be on the unit level. So what is our standard? We want to spend what? 20 cedis for every kilogram of raw material that we are buying. At the end of the day, we have purchased 25,000 kilograms. Based on our budget, what should have been our flex budget for that? It should have been the standard, which is the budget amount multiplied by the actual value. Then we now compare with the actual amount that we spent in buying the raw material. Very simple, the same thing. So Sunday, we pick some questions on basic variances. How do we calculate it for labor, for material, for variable overhead, for fixed costs, and for sales and some other issues? We look at them, then we try and see whether we can look at advanced variances. So maybe we should be able to finish everything on the basic variances on Sunday. Maybe next week, Thursday, we should finish the advanced variances. Then we start with performance evaluation. All right, so seniors, if do you have any question? Do you have any question for me? Do you have something that you want us to look at? Any question? Do you get the issues about the throughput accounting? If I should give you assignment on throughput accounting, what should I be expecting? 10/10 or 20/20? Sinaiben, what should I be expecting? 10/10 or 20/20? Senior Kafi, Senior David, are we okay with the throughput accounting issues?
Yes, sir.
Okay. So that's it. If we don't have any other question, I would like us to end it over here and we continue on Sunday. Thank you all for coming, and I will see you guys on Sunday. All right.
Thank you.
All right.